Ollie. So hello everybody and welcome to today's special webinar event. I'm Terry Ryder, founder of hotspotting.com.au, and today we're going to be discussing hotspots and hot issues for commercial investors. My special guest today is James Dawson of the Commercial Investing Academy. Now, ever since government decisions mandated a shutdown of normal life, including many businesses throughout Australia, many people across the nation have been dealing with the problems of being either a landlord or a tenant. Governments have been making up their policy responses on the run, by and large, without the usual consultation or consideration, and sometimes the consequences of that have been unexpected and in some cases downright ugly. So this situation is applied not only to residential property but to other forms of real estate, including commercial, industrial and retail property. A general theme that has emerged is that protecting the tenants is an urgent priority, but little thought sometimes has been given to the problems of the property owner. So today we're going to explore some of those issues, and we'll look at the types of properties that have been affected and those that have been less affected in the pandemic. And we'll also take a look at the issues around locations, which ones are doing the best in the current situation, the ones that may do best as we move through the recovery phase. And as always, we'd like your participation. So please type your questions into the chat box. And if you'd like to ask your question live, you can click on the put your hand up button and we can unmute you and you can have a discussion with myself and James Dawson of the Commercial Leasing Academy. So James, welcome.
Thanks, Terry. Thank you very much.
So let's get right into it, and perhaps we could just start by, you could perhaps tell us a little bit about the Commercial Investing Academy for people who aren't familiar with yourself and what you do with that.
Yeah, thanks, Terry. So I've been a commercial investor for over 40 years now, and certainly interesting times at the moment in the last few months, but I've been running a course on commercial property investing that for about 8 years now, which is primarily aimed at bringing people up to speed with their education to be able to carefully and safely invest in a commercial property. We don't sell properties at all. It's just really teaching people the basics and also some more advanced methods in finding and negotiating commercial property. And primarily my target group is, I guess, residential investors that are then stepping up to add a commercial property to their portfolio, and particularly now with interest rates, you know, for commercial loans, some of them down under 3% and getting some returns on commercial properties around 7% net. They're very cash flow positive, so it can be, you know, a great solution to get some extra passive income.
So let's just clarify what we are talking about today, and it's primarily we're talking about small commercial, industrial property, small retail, primarily that kind of property.
Yes, that's right. So I really, I'm particularly focused as an investor on sort of small to medium investments, say rent bases of say $20,000 up to say $200,000 per tenant. And most people that I teach and in my course are in a similar position. So, you know, properties that are perhaps under $4 or $5 million. So not talking about, you know, buying $200 million properties. And I think with this current situation that we've had and we're moving through, the biggest effect probably has been on the properties that people like me have. So it's certainly been an interesting experience that, you know, I never thought I'd see in 40 years of investing. So, and quite stressful as well, but I do feel we're coming out of it, so we can dig into that as we move through this.
Okay, and the types of properties that have been most affected, what have you found?
Well, essentially, I mean, I've got a fairly good spread of the properties that have been affected. So, you know, cafe, but properties that have tenants that are sort of, you know, discretionary spending, I guess. You know, so you've got cafes, restaurants, hospitality style of businesses. They were sort of the first to be shut down. I've also got a couple of gymnasium tenants. They were shut down. I've also got a childcare tenant. They had some issues initially, but then they seemed to resolve fairly quickly. So that's sort of, you know, property that's got a a tenant in there that really, sort of like dress shops and things like that. Some of those remained open, but people were too frightened to go into them. So some of those properties that were discretionary spending just didn't do well at all. And they're the ones now that, from what I have found over the last few weeks of talking to business owners and my own tenants, they're just itching to get open. If they're not already open, they're just really hanging out to get back into business, because that's where they make their living. So it's been an interesting experience. But then you have the non-discretionary properties, and we can show some examples later, but hardware stores, Bunnings, for etc., those sort of places have been absolutely flat out. Medical centres, things like that, of course, with restrictions. It seemed to take about a month or so to get into a bit of a run of what could be open and how they would operate before people felt even safe going into any business. So it's certainly been interesting, and that's something to note for the future, I guess, if anything like this ever happens again.
And no doubt it will in some form or other. So it's been, I guess, food store type businesses that have done okay. In fact, I imagine many of them have thrived in this period. So it's sort of offset some of the other ones to a certain extent.
Yeah, absolutely. So certainly, supermarkets, things like that have been, probably trading their head off. Convenience stores have definitely been, very, very busy. In fact, I think just from the Shopping Centre Council of Australia, I read something the other day, and they had some percentages that cafes and takeaways, for example, were about 30% of the businesses that were affected. Hair, beauty and nails were the next sort of 15%, clothing, footwear 13%, and hardware, pharmacy, medical only, and supermarkets only, affected about 5%. And supermarkets basically not affected at all, because it's like fuel stations needed to be open. So it's interesting that how things sort of slammed shut in degrees, depending on what they were, and how much physical contact, I guess, that the government was worried about happening within those businesses.
Yeah. And as somebody that owns commercial type property, and also with you've got clients of your business who do as well, just how busy has it been sorting out the tenancy issues through all of this?
Yeah, I think the first few weeks, I guess, most landlords, including myself, went into a slight shock period where we're thinking, wow, this is extremely unusual. There was this period of trying to get in touch with the property managers, trying to get in touch with tenants if you were talking to the tenants directly. Some tenants, or most tenants, I guess, were in shock themselves. They're worried about their own business. Overall, I think the right thing to do was, forgetting about even imagining that a code of conduct was coming out, was to try and sort something out with the tenants. So, for example, my large gymnasium tenant that simply sent me an email and said, "Look, we've had to shut the doors. We're gone. Well, we need to talk." That was quite a good result. We spoke, we agreed on a rent abatement, but reviewed every month. But some other tenants from other landlords I've heard, were virtually uncontactable. So that made it very difficult to try and navigate your way forward. But I think with most people, after about 4 weeks of the initial shutdown, people started to talk and say, well, okay, what are we going to do here? How are we going to work the financial situation? And then, of course, when the code of conduct came out, that really gave us a basis to move forward. And I think the biggest thing with that was that as landlords, we wanted to know that our leases were going to be safe, that, the government wasn't suddenly going to say, well, look, tenants can just walk away from their leases. And I think that actually some tenants probably thought that, oh, wow, this is, if my business was a bit quiet before, this is the end of it. And this is a great opportunity now just to walk away, so, and that probably has happened quite a bit with businesses that were on the edge. There's certainly been a bit of a sort out, but You know, if you had a good investment before, with a reasonably trading tenant and paying a reasonable rent, there's no reason why they won't get back to normal. But I'm sure that there's you know, a bit of a fallout with some tenants that were on the edge.
Yeah. So when this thing first came along, people in your position would be having one-to-one conversations with your tenants, but then we got this layer of government coming over the top, trying to deal with the situation. Was it ultimately helpful, or did it just make things even worse?
Look, I think it was ultimately helpful, particularly with and I've spoken to a lot of landlords in the last, you know, 5-6 weeks, and it was particularly helpful for anyone that had a difficult tenant or a tenant that wasn't communicating. And just by way of example, you know, some tenants who were still trading, even, you know, that were trading in businesses that were non-discretionary spending businesses, you know, might have been a fuel station or convenience store, still trading quite well, were asking for rent reductions. And when that code came out, it put forward a method of saying, well, okay, you've got to, you know, have a reduction of at least 30% of your turnover. So I know that quite quickly a few agencies and lawyers developed forms to send out to the tenant saying, well, okay, you've got to fill this form out and show us your turnover from last year and your turnover for March, for example, and let's see what the difference is. And that really sorted a lot of issues out, because a lot of tenants were, you know, either unprepared, not prepared to expose themselves that they were still trading okay, and certainly if they weren't trading okay, they were very happy to, you know, get their zero report on paper and send it to you. And as a landlord, you know, you could say, okay, that's fair enough. If they've dropped 50% or 70%, you know, we need to talk, because as a landlord, you want the tenant to be back in that premises at the end of the day as soon as possible.
Yeah. So would it be fair to say that in terms of the issues surrounding all of this code of conduct, that's a product of the National Cabinet, would be the key thing for people to be aware of, to know about, and to be acting on as commercial landlords?
Yeah, I think that was the biggest thing. I mean, overall, I think a lot of tenants decided that the code of conduct was just an idea and not something that, you know, could be sort of imposed on them. But it really was meant to bring the landlord and tenant together in good faith to work out some leasing principles. And then it had these, you know, sort of benchmark points, like, you know, broadly a tenant needs to have dropped at least 30% in their turnover to ask for a rent reduction. And then there was methods put forward of, you know, if someone got a 30% reduction, for example, 15% of that or half of that amount might have been completely waived, and then they would pay the other 15% off over a period of time. And it did set out clearly that, you know, over a period of, say, at least 24 months or the balance of their lease, they could pay back that 15%, and cleared up issues of, for example, of saying, look, a landlord can't charge them interest for that money. And, you know, also wouldn't be able to put the rent up according to CPI during the period, which seemed to be from March to September. So there was, you know, a few things that were clearly set out, which made that much easier for us all to sort of get our head around.
So would now be an opportune time to go to the slideshow and to talk through some.
Yeah, so look, we'll have a look at that too. The first couple of slides there, if you can share that screen, that would be great. I won't run through the whole code because that'll put people to sleep, but we can have a look at the major points of the code. There's about 13 points. Yes, I won't. I'll just touch on these points, Terry, because it actually is quite important. And I'm just reading from my notes here because I challenge anyone to remember most of this stuff. But it just essentially, you know, point one, landlords must not terminate leases due to non-payment of rent during the period. So, you know, it sort of gave tenants, I guess, a level of safety if they basically couldn't pay their rent and you couldn't boot them out during that period. Not that, you know, a normal landlord would probably do that. Tenants, number 2, must remain committed to the terms of the lease. Now, that was a big one for landlords, because I know that a lot of us were quite worried about that. We thought, God, does that mean all these leases, which, you know, are a very powerful document, they're like a mortgage almost, and some of them are registered on title, you know, we were worried that, you know, leases were suddenly going to get thrown out the window. So that was a good thing to clear up. Landlords, number 3, must offer proportionate reductions in rent. So that was where there was a lot of confusion about that. People just saying, look, I just can't pay rent because my business has dropped a little bit. And the principle of the code really is to share the load, whereas some tenants perhaps felt that the landlord should completely take the whole risk of the downturn, when, of course, anyone in business has taken a risk. So we need to share that risk. So that was a big thing to clarify. And then number 4, rental waivers, you know, must be no less than 50% of the total reduction in the rent payable. Now, that it started to get a little bit confusing there, but essentially, like that 30% example I gave before, you know, it was one of those things that if they lost 100% of their business, essentially, you know, you could either decide to stop their rent 100% or 50% and get some paid back. So it was a little bit of a tricky negotiation. I know most landlords that I know, and I certainly have done it myself, is that when some of them shut completely, I completely stopped the rent for at least the first month, and then started negotiating again the second month. Now, this code does allow you to negotiate, you know, away from the code, but you just got to observe the principles. Payment of rentals, deferrals, as I mentioned, you know, over a period of no less than 24 months. And, you know, also not charging outgoings. We can move, I think, to the next slide now there, Terry or Katie, that would be great, which covers the rest of the principles there. Number 6, if a landlord gets any reduction in land tax, which, you know, there is availability of perhaps a 25% rebate or waiver on land tax, you should pass that on to the tenants if they are paying land tax. It's sort of common sense, really, that, you know, some of these things should be passed on. Also, you know, you can perhaps get your land tax deferred for 3 months. So I'm a little bit hazy on that land tax issue if you've already paid land tax for the year. So that's one I'm personally chasing up. And if any arrangements, you know, about repayments, they should be, you know, taken over a period of time that's going to suit everyone. So you can't really sort of jump in and say to someone, look, you've got to pay this off in 3 months. Once again, no fees, interest or other charges can be applied to any of those repayments of the rent. And also number 11, you can't draw during this COVID period, you can't draw on their security during the period, and a reasonable recovery period, which I'm not quite sure what that recovery period means. So there's a few vague things in this code which need to be sorted out. And also another great idea and suggestion of the code is that you can give the tenant the opportunity to extend their lease. So if this thing goes on for, say, 6 months, hopefully it's only going on for, you know, coming out of it now, that you can then offer the tenant an extension on their lease, and that's both good for you and the tenant, generally speaking. Freeze on rent increases. So basically no rental increases except for retail leases based on turnover rent. And those turnover rents, actually, I mean, I know a lot of supermarket tenants have a turnover rent, so it doesn't apply to that. So these, all these things, you know, basically come into play throughout a negotiation with the tenant. Now, if you can't agree with the tenant, you can then go to a mediation and then perhaps go via your lawyer. But I must say, any landlord that would be negotiating with the tenant, you must get a lawyer to write up a document or adjust the lease or get agreement in writing, because you don't want particularly any reduction in rent to somehow affect your next market review of the property. So there's a few sort of issues there, depending on how the lease is drawn up, that you need to be very, very careful of. So I just think it's absolutely essential to get legal advice, and likewise for the tenant, to get legal advice before they agree to anything. And these negotiations, big point here, these negotiations obviously can take time. I mean, 2, 3, 4, 5 weeks I've been negotiating with one tenant, and you can actually, if they have been paying some money and perhaps been paying full rent, you could backdate it and give them, a reduction that's backdated. So we can probably move to the next slide, just a couple of new newspaper articles there, Terry, which just interesting. I won't read the whole thing, but this is just in the last couple of days that Shopping Centre Council of Australia, they reckon, between 70 and 80% of retailers are open. My feeling is that the big shopping centres, the Westfields, etc., are the ones that, are really probably going to have most of the problems due to perhaps, generally higher rents. But the sort of high street shops, the hair salons, the beauty salons, stuff like that, news agents and, chemists and all that, they're all, I mean, just in Byron here's probably a good example, it's a tourist town, but they're all pretty much open now and trading as hard as they can. And a cafe tenant I've got in Newcastle, they're pretty much back open. So, I would say probably all of us, anyone listening to this would agree that, it seemed to has resolved itself quite well, although there's probably still some grief out there for a lot of small businesses. So we just have to sort of see how we're going to go with that. The next slide's actually an interesting one as well. Now it's actually a very confusing thing when I read the actual report, but Released is a company that provides rental collection software to a lot of agents. And they did a report that was aggregated from over 20,000 properties and 30,000 leases. So it's a pretty large amount of people. So they were sort of saying here, just in one paragraph, I didn't highlight it, sorry, it probably makes it a bit hard to read, but 67% of rent due across all property sectors in their system had been received on average, over a period where on average 89% of it would be received at this time of the month. So there was, like a 20% reduction of the amount of rent, I guess, received for that month of April. And when you see that figure of 89% received for a month, obviously a lot of people, miss the rent, pay a few days late. So that's probably how they get to that figure. But they're just pointing out there that retail has fared the worst, recording only 52% of retail payments received by May 27, compared with the usual 84% of people that pay during that month. So I think that's a pretty good barometer. And I think, just with my own town of Byron here, which basically pretty well shut down, I would say, 85% of the businesses were shut. And just the supermarkets and a couple of takeaway cafes, things like that, chemists, etc., had been open. So, yeah, so very, very interesting there. So it's going to be interesting just to see what happens in the next month, because it does seem to be changing quite rapidly. Probably move on to the next slide there now, Terry. I'm not sure. Oh, that's right. We've got the childcare property. So, the other thing that's been quite sort of interesting is how quickly the government sort of moved to lash out with the spending, so the JobKeeper, etc. And actually, just a point which I forgot to mention, the code of conduct, it was essential that the tenant really was able to get the JobKeeper payment before they sort of applied the code to their business. So it was just one of those things that they really needed to give evidence that they had reduced cash flow and give evidence that they had applied for the JobKeeper or getting the JobKeeper. So that was a couple of things that the code had mentioned as well. But I've got a childcare centre, and they, initially were struggling, and then the government came in and sort of made the childcare free for all. And so that sort of came good again, although we did give them a slight reduction in rent. And now we're waiting to see what happens at the end of this sort of free childcare. So there's still a few of these style of tenants where it is a little bit confusing, and we're just sort of watching that. And once again, I think anyone that's got a childcare, I know there's a lot of childcare investors out there, small to medium investors. They really need to be keeping in touch with their property managers, at least every couple of weeks, just to see what's going on and to see if everyone's up to date with what's happening there.
So, James, the announcement just only yesterday by the federal government, I assume you're across all that. How does that impact that kind of investment?
Yes, I think I'm actually just put a call in today to find out a little bit more, but I haven't actually heard back. It does sound a little bit worrying, I've got to say, just to see where that's going to go, because basically they're pulling the pin on the free childcare, and also JobKeeper for childcare centres. So we'll just have to see how that goes, and that seems earlier than the sort of 1st of September date that was muted before. So yeah, I think that's certainly something that needs a bit of further investigation. But I guess, look, people are wanting to get back to work, and if you've got a well-located childcare in, particularly in an area where obviously they're usually put in areas where they're going to be 80% occupancy, at least something like that. Once people start opening their businesses again and need to have the kids in childcare, that's certainly going to bring it back to normal, hopefully fairly quickly. So we can probably move on to the next slide there. Terry, I hope that's answered. I'm a bit vague about that because I need to find out a little bit more about that.
Sure.
But, just some sort of random slides here, I guess, because of the businesses that have done reasonably well. And just once again, in my own town, this is a logistics style warehouse in Wollongong, but in the industrial estate in Byron, for example, businesses that didn't have to have or didn't rely on people actually coming into the physical workspace too much, and therefore not having to have too much social distancing. Even at Bunnings, when anyone goes to Bunnings now, they just put a couple of extra plastic tables at the counter just to keep people away a little bit. So if you're going to a lot of the industrial sort of premises, to get something repaired or something like that, or go to the electrical lighting shop, it was quite easy for those guys to have social distancing and operate their businesses, and overlaying that with businesses of a type that was non-discretionary spending. There's still a hell of a lot of building stuff going on around Byron and renovating, everyone doing stuff at home. So people were in hardware stores, lighting shops, plumbing supply shops, all that. So certainly these are one of the businesses that, I guess, if you've got one of these, you probably could have been, quite smug throughout this period and not worried too much. Well, smug's probably the wrong word, but not being overly concerned that it was going to be a long-term sort of shutdown.
And Wollongong as a location, James, my general feeling throughout this pandemic period is that many of the regional cities have been better placed to ride it out quite comfortably than the biggest cities, unless they're regional cities primarily dependent on the tourism and hospitality industry. So how have you found Wollongong as a performer in this?
Yeah, I think you're absolutely right. I think compared to the big cities, I mean, inner city, Sydney and as you say, tourism areas have really suffered. I mean, I've got some residential property in Sydney, for example, and most of the tenants that work in the hospitality trade. So that's been a bit hard there. But I agree. I think towns like Wollongong and probably some quite solid country areas like Tamworth, things like that that have farming going on. I spoke to a couple of my farming mates that they're quite busy doing things. They've had some rain, stuff's going on. So the businesses that were servicing them basically unaffected, apart from the precautions that they had to take with social distancing and all that. So, it does back that whole idea up of looking for commercial investments in a good, solid regional area can be a very good thing.
Yeah.
So we go to the next slide there. I'm not sure, it's a bit of a random mix, but this is a medical centre actually. And look, I've been to the doctor twice since since the COVID happened, and also got tested. And those guys are still operating right through. So if you owned one of these buildings, I think overall, I guess what people are sort of asking me mostly, they're saying, what would I buy now that's going to be safe if this happens again next year, or we have a second wave? Well, no one can say for sure, but there's the businesses that have been unaffected, like perhaps some medical centres, even though they've been on reduced flow, I guess, through the businesses, they probably are going to be very, very safe. Dentistry was a different thing. Most of the dentists, from what I can hear, except for emergency, basically had to totally shut, just because of the nature, of course, of the businesses there. But doctors, my local doctor, who went on to sort of a more telehealth basis, they were still in the surgery, so they were still paying rent on the surgery, and they were still actually in their premises. So I think that's quite a good example of something that would fare well and be a great investment for the future.
And what's the location of this property, James?
This one I think is actually in Sydney, and it's and actually good. It's a freestanding building, which is always a great thing to own the land. I mean, nothing wrong with strata investments. I haven't got any. I don't have all the details in front of me on this one, but it popped up when I was looking a few weeks ago. May not still be available. Everyone's probably Googling around now, Terry, to try and buy this. These sort of freestanding style investments, newish building, good depreciation benefits, and a tenant that's fairly stable like this in any sort of pandemic environment would be good.
Yeah.
Brings me to a point, actually. I mean, when you're looking at any investments, I mean, even through this pandemic, coming out the other side, the most important thing is to stick to the basics. And I've always been banging on about, buying properties that are cash flow positive and or have, some sort of upside or ability to manufacture some growth. And one thing I know that a lot of members of my course have spoken about, saying, well, look, my property, for example, one guy said to me, I've been 40,000 a year cash flow positive for 5 years. So if I'm going to take a hit for 3 months, it doesn't really matter. And so, that's always the principle of any investing, is, to have a bit of a buffer. So, I mean, who would have thought in my 40 years of investing, I never would have thought that the whole world would have got shut down so quickly and so hard.
Yeah.
And that's when you need the buffer.
Yeah. So, James, I think that's a very pertinent point. I think of all the things about non-residential investment that stands out for me is that positive cash flow that you're able to generate with a typical commercial investment. Really strong cash flow. You mentioned figures like 6 and 7% net, which most residential investors could only dream about. And but the second part of the point is that what you made about building a buffer for the bad times, and those that were sensible enough and had the foresight to do that would have sailed fairly easily through this period, because it's been relatively short.
That's right, and I think it's probably going to be interesting to see how many commercial investors actually pause their loans, because that's the other thing we hadn't mentioned, of course, that was, the other big thing that came out of this, that, most banks, not all, I've got to say, offered to pause loans really quite quickly, which, gave people a break. So some landlords that I know were still collecting, say, 70% of their rents, but essentially had their loans paused. Now, there's no free lunch, because at the end of 180 days, I know with one of my loans, for example, the bank said, oh, let's just roll that, instead of rolling a 30-day bill, we'll roll it at 180 days, James. So, but I've still got to pay the interest at the 180 days, but at least it gave, a little bit of a break, and don't go and spend it on a new car, but you can, build up your buffer. But the other point is it's, a sort of a positive, because, I mean, there's been so much negative press, of course, about all the stuff, but I mean, and the average person I speak to in the street say, oh my God, would you ever invest in commercial? Well, of course you would, but if you read the papers, you probably wouldn't, But, loan interest rates, one of my friends actually just got a commercial loan through at 2.59% interest only. So, with a major bank, and a 7% net return property with a really good stable tenant. So there's great deals out there, and I guess this whole thing would really mean that interest rates probably are going to stay low for a lot longer than we ever imagined. So if you can get into a property and then build up that buffer and be careful and select the right property in the first place, it's going to be good moving forward.
Is this a particular time of opportunity for people considering commercial investments, that does the possibility of buying something well? I know you've told me, described some of your investments to me. One was a retail one where I think when you bought it, there was something like a dozen tenancies, but 8 or so of them were vacant. So you got the property at a reduced price and then set about tenanting. And by the time it was fully tenanted, the rental return was fantastic, positive cash flow. So is this a time of opportunity for investors?
Yeah, absolutely, Terry. I think, look, I guess, this is when, buying gloom, selling boom. It's the old saying. And, I'm not suggesting to be a property trader, but there'd probably be a large selection of, say, investors that perhaps aren't very experienced or just starting out, that would be perhaps too nervous to go and buy. But look, banks are lending. It's business as usual. Obviously, there's certain things that are going to be different with certain banks and how they look at loans and servicing and all that. But there's great deals around, and I guess there's still commercial owners putting properties on the market. If they're planning to sell, before March, they still have them on the market. And one of the buyers agents I deal with, Rethink Investing, they're back up to 80% of their business already. So they've, they sort of, went quiet for maybe a month, and they're right back up there. So that there are people looking, and I think there's a reasonable level of stock. So in commercial properties, as compared to, say, residential, where, from what I read, some people seem to be sitting on their hands deciding whether to sell or not. So there seems to, I know particularly in Byron, there's a tremendous lack of good stock here, according to the agents, with residential and rural properties. So whether or not people are just sort of sitting around thinking, oh, gee, I'll wait and see what happens, and just, keep waiting, it's going to be a little bit interesting to follow in the next 3 to 6 months, I think.
Yeah. Just remind everybody who's watching and listening that if you have questions, please type them into the chat box, or you also have the option of clicking on the raise your hand, and we'll unmute you and you can ask your question live. Anthony's watching out there via Facebook, asked the question or makes the comment that he notes from many reports there's been a spike of interest in industrial properties in particular. Is that something you've noticed?
Yes, absolutely. I think the whole thing, like that little property at Wollongong, that, I guess, through the COVID thing, of course, everyone's getting stuff online, getting stuff delivered. So any sort of industrial building, I guess a lot of people say, in their minds, they think, okay, that's where all this stuff is warehouse. So that would be a great investment. That's certainly the case. And then, as I mentioned before, businesses that really didn't get much impact from social distancing, like sort of going to, Reese Plumbing, for example, investments like that would be definitely a good pandemic safe investment. anything that, you know, involves non-discretionary spending, you know, like car repairs, everyone still had to get stuff repaired. I think that's why there's been a bit more interest in industrial. Now, that actually was sort of happening before COVID happened. There was more interest in industrial, and partly that was because you're getting a lot of these small industrial estates that are sort of getting a little bit of a crossover of sort of retail, big box, sometimes cafe and sometimes food, and part industrial. So you might get a block of 6 or 7 industrial warehouses that, you know, do have a cafe, a retail shop, or, you know, some sort of combination. And there's a few of those in Byron. One of them's called Hive. I think I showed that one to you, Terry, which people can work, you know, architects can work from industrial spaces, things like that. So yeah, that's a good point. So we might flick on to the next slide there. There's probably a couple of other examples there. Yeah, this sort of actually, brings me to something like this office warehouse style of property has seemed to have fared fairly well. I looked at one actually in Maroochydore when we finally were able to get our A sticker on the window to get to Queensland. We drove up to Maroochydore a few weeks ago and looked at an office property, and, you know, properties like this that have, say, got lawyers, accountants, or large multinational firms haven't seemed to be affected that much, even if some of their staff went to work from home. From the people we spoke to in some of the offices, they you know, either had a skeleton staff in the office at all times, or people were rotating, but the overall feeling was they were all desperate to get back into the office. They were sick of being at home after the initial honeymoon period. I mean, different for you and I, Terry, because we've always worked from home, so I don't mind it. You know, there's no change. But a lot of people, you know, thought it was fantastic working from home for the initial 3 or 4 weeks. But, you know, they miss that interaction in the office, or, you know, they don't want to be sitting around in their tracky pants all day, you know. So we found that these style of investments, you know, particularly if they can get the social distancing happening as well in some of the office spaces, that would make them even safer in a pandemic situation.
So this investment's on the Sunshine Coast in Queensland?
Yeah, I think this one is actually. Now this, you know, obviously look at the net income of 835,000. So, you know, it's probably 10 million plus investment. I haven't got much detail on this, but these buildings, actually a lot of these are, you know, the Sunshine Coast, I'm quite strong on the Sunshine Coast. I like the area. You know, they've got, you know, they've got the fastest internet apparently coming in Australia, and the international airport. Of course, I think you told me all about that, Terry. But, you know,
it's a good one to talk about, James, because, you know, we do want to touch on locations that have done quite well in this period, or are likely to do well coming out of it. And I think the Sunshine Coast is a great example. You're touching on some of the reasons why. It's very much about infrastructure spending. In some cases, it's about the makeup of the local economy. But for the Sunshine Coast, it's more than $20 billion is being spent on infrastructure. You mentioned the airport going international, a new CBD being constructed in Maroochydore from the ground up, the new medical precinct, which is still a work in progress, multi-billion-dollar medical precinct. All of that's just generating a much stronger economy, and I think it's just added to what is already a very, very strong case for investing in the Sunshine Coast.
Oh, absolutely. And I think too, Terry, I mean, you would know better than me, but the residential prices, I mean, say compared to, you know, say Sydney and places like that, you know, a young family can move up there and get, you know, house and land probably for the price of it, you know, 1 or 2 bedroom apartment in Bondi, you know, depending where they are. And if they can, you know, get work, or, you know, move their work or work for their company up there, it's you know, the lifestyle of those coastal areas is fantastic. And I've got to say, every time I drive up there, you just think, wow, they're building another road, or they're doing something else. And I did actually go for a look around the new city centre of Maroochydore. They're really well underway with that.
Yeah.
So,
and you mentioned the roadworks. They're spending $1 billion on the motorway on the fringe of the Sunshine Coast. Just another of
Mm.
projects that are making up that $20 billion plus in infrastructure spending, which is creating a lot of economic activity, jobs, bringing new people in. The medical precincts brought a lot of new people to come and work and live on the Sunshine Coast. So, and many of them, well-paid medical professionals, has really boosted the residential market on the Sunshine Coast. But there'll be flow-throughs to all forms of property. Retail property will benefit from that kind of trend, and industrial commercial, providing support services to everything that's happening, would benefit as well.
Yeah, I think, overall, anyone that's looking, and, it's always the question of where to look for an investment. And really, if you follow the basics like you do when you're searching, the residential areas and the research that you guys put into it, it sort of follows that if those areas are going really well residentially, that there's going to be a need for commercial spaces of all types. And also that the undersea internet cable there, I think that would be something. You can only imagine if that was already sort of running now through this pandemic, you would have had people, screaming to be isolating themselves up in Maroochydore or the Sunshine Coast with super fast internet, which no one seems to have anywhere in Australia at the moment. So,
and it's coming very soon. As you mentioned, through the subsea cable, the Sunshine Coast will have the fastest internet link to Asia from anywhere on the east coast of Australia. Just another factor, building a very strong case for this market. While we're up in Queensland, Michael has been asking a question about Rockhampton. Is that a market that you ever look at, James?
Look, I have, but not for quite some time. Good question, Michael. Thank you. I haven't actually focused up there for quite some time, and I know that some areas of Rockhampton are subject to flooding, so that's that can be a bit of a red flag, of course. Although a town close to me here, Lismore, floods regularly and then seems to bounce back. But once again, if you follow the basics in any of these areas, the basics of good tenant, good lease, good tenant history, adaptable building, that sort of thing. And if you look at, then go back, say, through some of Terry's reports on the residential side of things, and just see generally what's going on. If it's growing, it's a good thing. If it's retracting, it's probably not such a good thing. Yeah. So
as Michael mentions in his question, he refers to the diversity of the economy. That's certainly true of Rockhampton. It's very, very big in the beef industry. Markets itself as the beef capital of Australia, and there's a strong argument for that. It's got strong links to the mining sector, and that is a sector that's really thriving at the moment.
yes.
One thing that I would point out to you, Michael, is that some of the regional Queensland cities, including Rockhampton, have actually seen rental demand residentially rising and rents rising. And a lot of it's coming from the resources sector because cities like Rockhampton are very proximate to the major mining centres of central Queensland. And that sector has been thriving through all this and will probably continue to do so. So Rockhampton's residential market, particularly the rental market, has been getting benefit from that. So the diversity in the economy includes that the beef industry, the mining sector has a university, major medical facilities, some tourism, which is not so strong at the moment, but it's not the be-all and end-all of the Rockhampton economy, and of course agriculture. So it's a good, strong city, and it seems to be coming into a period of strength right now. So I think a lot of investors would look at it and look at the affordability of it, the strength of the rental returns, and would think that, say, in the short to medium term, there's some good prospects there.
It's certainly not a one-horse town, so that's good thing.
Yeah, that's right. That diversity, James, is so important. I think many of the factors, because we do tend to look at hotspotting at things from a residential property viewpoint, but I think many of the factors that would cause us to recommend an area would apply equally to commercial, industrial, retail property, the underlying economy, the level of spending on infrastructure, etc. Equally important to the types of property that you invest in.
Yeah, absolutely. And I think anyone that's searching for commercial property, that's that's got to be one of the levels of due diligence that you spend quite a bit of time on, just to see what's going on there. So yeah, very big point. And I think just touching on the tourism, I guess, well, there's 2 points you made there, Terry, with the, the mining, with the lack of virgin, I guess, working now, and you're wondering about where these miners are living. They want to be close, but they often don't want to be in the mining towns themselves.
Yes.
So they'll drive, like Mackay, for example. They don't want to live in Moranbah, but they'll drive into Mackay, which is a couple of hours, I think, to stay. So that's caused a boost there as well.
That's very much so. It's not so much about fly in, fly out as drive in, drive out at the moment. And that's why centres, I think, like Mackay, Rockhampton and also Gladstone have had a real uplift in rental demand and rents actually rising through this period, where in other parts of Australia the opposite has been happening.
Yeah. So I might just go to the next slide there, Terry. And
Sure.
That's another thing, actually. I think with this, these travel restrictions that, obviously going to be in place for who knows how long. Once it's a bit, silly. I think Queensland's got the border shut, but once they open, I mean, people are just going to flood to these areas. I know when they opened the holiday letting books back here in Byron, that the bookings have gone crazy here.
Yeah.
So,
I think that's happening in Queensland. People can't travel into Queensland from outside, James, but they can certainly now travel in an unrestricted way around Queensland. My town, Maloney, is a town that gets very busy at weekends with day tripper and weekender tourists. And last weekend, the town and the roads leading to and from were just choked. People are just desperate to get out and do that. So I think we're going to see places like Byron, where you are, and other tourist places really come back quite strongly now that some of the restrictions are being relaxed.
Yeah, absolutely. And I've noticed here, just from friends and family looking at accommodation in Byron's, probably the same up your way as well, Terry, that the rents are probably, the holiday letting rents are probably 10 or 15% higher than they were last year, or at least that's what they're asking to try and get, the bookings through for, later in the year. But even just walking on the beach here this morning, there was more people than I'd seen in months. So yeah, it's a good barometer. But yes, look at this property here, just another one that I picked up, which is, probably, the perfect combination, where you've got almost, a bit of light industrial with the repair shop, the service station, and then a little Coles Express. And, these sort of properties, I guess this is, probably a $3 or $4 million property, maybe. They would be a great safe investment. But still, with that, there may be some challenges, I guess, with with some of the businesses in these sort of deals, where if it's an older construction and perhaps not able to have the social distancing, if that's what we're going to need moving forward, to have some businesses that just really physically aren't that suitable for social distancing, that could be something to have a fresh look at when you're looking at any property at the moment. So just something to bear in mind. But yeah, for example, some older hardware stores, like maybe Mitre 10 here in Byron, not quite as easy to be have social distancing as it was in Bunnings, for example, just for the size of it. So that's quite a good one. Maybe the next slide there's probably another little example. Another same thing, these service stations. And just by the way, probably someone will ask the question, but I get the question probably every week or so is, why is financing a little bit harder on service stations? And to tell you the truth, none of us are really ever sure, let alone my brokers and valuers, but sometimes they'll only lend 50% on these style of investments. So just bear that in mind. And also there can be sometimes contamination issues, particularly with older service station investments. So whilst they could be completely pandemic proof, as an investment, same old thing applies, the basics and due diligence. But you'll notice more and more that they've got this sort of convenience store component to them, and that can be a great thing.
We've had that dichotomy recently, James, where petrol's been incredibly cheap, but people haven't had a great use for their cars in the
That's
short
right.
down period. I've wondered how some of those service station businesses have gone through that. Are people been filling up and hoarding, or yeah, I'm
Yeah.
not sure.
Yeah, that's right. I mean, look, I've got an electric vehicle, so it doesn't worry me now. But you know, that's right. I think, you know, the petrol prices were getting cheaper and cheaper and cheaper, but no one was going anywhere. But I guess, yeah, look, it's just, you know, I think when all this started, I mean, I personally thought, you know, from what people were saying, oh, this might go on for 6 or 8 months, and you know, it has reopened quite quickly. You know, so I'm just, you know, I guess we're all hoping that we don't get a second wave and starting again. So, I mean, these businesses would have perhaps suffered. I'm not aware. I haven't spoken to any landlords of a service station. I know that all the ones around here were open, but I haven't spoken to. I'm not aware of any landlord. No one's put their hand up to me saying that they had to reduce their rents. So that will be interesting to find out if that has happened, you know, through this period.
Yeah.
We might flick on to the next slide there, Terry. I'm not sure how many more we've got to go. They're just a few little random examples here, but oh, this one, yeah. Well, I guess this is the classic, you know, golden egg investment in any pandemic. Now, interestingly, I was negotiating with a small supermarket convenience store that's been going on for months, I've got to say, and then the COVID hit and everything went quiet. This for my own centre, and now I've got two interested parties and potentially a third. So you know, now there's this more interest in leasing of, you know, of shops for you know, supermarkets or smaller convenience, and some of them are, you know, convenience stores slash cafes slash food. So but these, I know the people in the group that I'm involved in, my commercial property group, quite a number of them have got small supermarkets, and they've been, you know, obviously completely safe during the COVID, and no rent reductions at all. So just a, you know, a classic essential business.
And you would imagine, I mean, it's obviously been a great one to have during a pandemic shutdown, but longer term beyond this this period would always be a solid tenant to have, I'd imagine.
Yeah, that's right. I think, look, with always some provisos. I mean, the same basic supply. Like if someone's talking to me about, you know, say buying an IGA or a small supermarket like this, you know, it's always good to have a look around the town. Let's say if it was in a regional area, and quite often if there is another big Woolies or Coles or Aldi or something that's, you know, say within a 5 kilometre radius, I would rather that they're there already. And if the one that they're looking at's been trading for 5 years successfully, I would rather that all the supermarkets are actually in place already than, you know, than buying something like this and then worrying that, you know, a big Coles or Woolies is going to go in, you know, in 2 years' time. But you know, that's just part of your due diligence, but it's just something to be aware of. And like this one, I'm not actually sure where this is, but, you know, expanding residential precinct, and these little sort of corner style small shopping centres in residential, in new residential areas, perhaps, or even, and older ones, of course, often go very well because people don't want to drive 3 or 4 kilometres if they can just go around the corner to get their bits and pieces, you know. So it's
So
not.
if you've got a tenancy like this, there's already a, you know, worse than an Aldi in the area, but they're still trading really strongly. It gives you some confidence that they're competing well and will be a good tenant longer term.
That's right, and you know, I think it's just very important to have a look, and I guess, you know, the basic principle too of if there's other commercial land that's sitting beside it that can be developed, you know, that would perhaps be a bit of a concern that, you know, someone else is going to come along and open something bigger and better, and then you know, pull away from this shop in their turnover. But just by the by, with these sort of properties, quite often you can actually get you know, ask for their turnover figures when you're doing your due diligence, because quite often these style of properties are paying a turnover rent. So they're paying a percentage above a certain amount. So if their turnover is, say, 2 million, they might pay, 3% of the turnover above 2 million. And one that I looked at in the last couple of years, they were going up sort of 10% every year for the last 10 years. So that was comforting. And then another one I looked at, which was in a very regional area of southeast Queensland, right out the back of the Gold Coast, they'd been retracting by about 5% a year. So that wasn't particularly good, because a new supermarket had opened in the town. So that was like a further sort of due diligence focus point, I guess, to look at. So yeah, it's just important to know these little tricks, I guess. Another slide there, Terry. I think we might have one more there. Oh, this one actually. So these, I guess, these sort of businesses, I guess, were probably one of the, cafes and sort of takeaway noodle bars, restaurants, obviously very, very affected during the COVID. And it was during this COVID period, we heard all these new terms come up, well, not new, but, reusing terms of like pivoting businesses and abundance of caution and social distancing and all this stuff that came up. So, these businesses really had to pivot. They had to either start doing home delivery or, takeaways, just standing out the front and doing takeaway food or coffees. And a couple of cafes that I know the owners personally actually, really thought that the world was going to collapse from under them, and we're actually doing quite well. They've done quite well. Didn't seek a rent reduction. Others, had to shut down their food initially because they were all eat in, and it didn't really suit them to do home delivery or takeaway. I'm not sure about a sushi business. I guess they could easily do home delivery, but as far as people sitting at a sushi train, obviously, that's a different thing. So that might be something when people are looking now at an investment, to have this in the back of their mind, where they say, okay, how could this business pivot? How could it physically operate? This business, for example, has got probably licensed footpath dining. So they could probably quite easily have had a barrier across the shop there, and people could just be getting served on the footpath. So those sort of little common sense things, now that we've had this issue, will certainly be a little bit in my mind when I'm looking at any deal that's got this style of tenant from now on.
Yeah.
But I don't know, have you been to Noosa recently, Terry? We're not allowed up there. Are they all opening back up, or?
No, I haven't been there recently, so I'm not sure. But just in the areas of the Sunshine Coast and locally that I'm familiar with, many have got by with being innovative, deliveries, takeaway, and now with gradually released restrictions, working within the boundaries to get things up and running. Restaurants have, initially in Queensland, there was a restriction of just 10 customers, and now it's 20, I think.
Yeah.
But some restaurants were having sort of 3 shifts a night. You had to come in at certain times and be gone by a certain time, so that they could make it work that way by having, say, 3 set shifts, limited to the number of customers they were allowed to have at the time. So, good businesses have found a way to trade through this, to keep the money coming in and staff employed, and now I think increasingly they'll be getting more and more back to normal.
Yeah, I think that's a really great point, actually. I think that, as I mentioned before, businesses who are perhaps on the edge, well, if you're a landlord, you probably would have known that they were on the edge before, with perhaps late rent payments and late outgoing payments, or, tricky things going on. But businesses that was, going quite well, and particularly something that, say, had a, 3 or 5 year history in premises like this, there's no reason to imagine why they wouldn't bounce back to to full operation they may change their operation. They might have slimmed it down a bit, and that might be a good thing. But or they might do more takeaway and things like that. But I think going forward, that's always going to be the thing to look for. Is their history? Was their history good pre-COVID? Obviously, everything was a bit of a schmozzle during the COVID. So, talking, if you can get to talk to the tenant personally, if you're looking at a property to buy, and find out a bit more about their business and their plans moving forward, particularly if you're buying right now or in the next few months, that's going to be a very important thing to do. So, obviously there's been this pause, and you wouldn't want to just make your decision based on the fact that, okay, business has been shut for a month or so just because of this, particularly if they've been open there for years before that. So just an important note when you're moving forward, I guess, with these things.
Yeah. Well, James, we've sort of clicked over the hour with the broadcast. We might just be able to have
just another
a few questions, or there was something in particular you wanted to comment about this slide?
This was just a good little one on a well-placed industrial building that's for sale, a little smaller property there. And I quite like these pictures where they show everything quite clearly, where everything is: McDonald's, the hospital, the train station, the hotel, and a fairly it's even off the major road, but it's got a major thoroughfare past it. So when you're looking at industrial properties, because I know a lot of people are focusing on industrial now, it's a great thing to have something that's well located, easy to find, and also easy to find in the actual block that the building is in. But also, just looking, say, at an aerial picture like this, there doesn't seem to be, obviously you need to investigate it fully, there doesn't seem to be any other large vacant parcels of land that could suddenly, put up 25 tilt-built industrial buildings, creating further demand. So depending on your length of lease, it's just something important to note, because some areas you go to, you look at a set of 6 beautiful industrial sheds, but then there's room for 200 more. And it's sort of like musical chairs when they come up. So that was the only comment with that, because I know a lot of people are looking for industrial, and look, you can get quite a good industrial investment, 300,000, even under that. So low, quite a low starting price point range, returns of anywhere, maybe 5% in Byron Bay, 5% net, but maybe up to in the 8s and even 9s for some regional areas. So so that was the last little point for that one.
Okay.
Oh, there's a little Byron Corner store. Actually, I just wanted, that was just another good example of a good business that pivoted quite well. And just, I guess, summarising that, great location before the COVID, great location now, great business before the COVID, and they were able to maintain their business because they had quite a lot of street frontage, round the corner at the front, and a little side coffee thing. So just a little tip, if someone's looking at something like that, you could say, well, this is great. They could at least put some counters there and serve people on the street. So common sense, but, with this new knowledge that we've got from the pandemic, just another little addition to some due diligence you might want to go through if you're looking at any property like this.
Okay, just perhaps a couple of deal with a couple of questions. Sure. Before we wrap it up, Helen, who wrote to us earlier, she's a landlord with an office tenant, requested 30% rental reduction, letter from the accountant sort of supporting their turnover drop, etc., and was getting JobKeeper. She offered a 20% reduction with no rental deferral for 3 months from June, but the tenant's still requesting the 30% reduction, and Helen's asking what are her options in dealing with that situation.
Yeah, okay. I think, look, they're a great question, and these are the sort of questions that are coming in. So essentially, if you followed the code there, Helen, really what the code is suggesting is that, if you agree to the 30% reduction, 15% of that would be written off, waived, and the other 15% would be paid back over a balance of time no less than 24 months or the balance of the lease. So now, if you can't agree, so you may be actually incorrect in sort of coming back at offering them a 20% reduction. It's not to say that they can't accept that, but if they haven't accepted it, they may be sticking. They might know the code well, or have had some advice, and they would then decide to stick to the code because obviously they want the 30%. So I think all you could do in that situation is talk to your property manager and perhaps your lawyer as well, just to try and resolve that. But I think overall, try and think long term with these things. You're only talking about 10% of the rent, and I know it perhaps is obviously reducing your cash flow. But moving forward, you hopefully want to keep that tenant in if they're in it, if they are a good tenant. And when it comes to signing a new lease or a new option with it, it may make a little bit of a difference that you looked after them a little bit now. So just have the big picture in mind.
Okay. And just finally, Lauren asked a question about our observation about Hervey Bay. Is that a market you've ever dabbled in at all?
I have had a look at some deals up there, and actually one big centre that was syndicated up there quite a number of years ago, which I probably should have bought into, but I wasn't into getting into syndication. But I think these areas are going to be interesting to watch because I guess it's a tourism-based area and also retirement, isn't it, Terry? So I think probably quite a strong area, and like all these areas, they'll have sort of micro markets, perhaps with good commercial areas and probably some not so good or secondary commercial areas. So definitely worth a look, particularly if you're living there. Obviously much easier to invest if you can get around and look at it while you're running around just in your normal day-to-day business. But I'm very solid on Queensland in general. Not to say there's great investments in New South Wales, Victoria, Adelaide, and all that, but I do like that area.
Yeah, and I think, Lauren, that Hervey Bay will come back strongly. We're seeing the evidence that when people have given the ability to get around again, to travel again at longer distances, they're keen to get out there as tourists and visit areas. They couldn't at Easter, and they're keen to do it now that some of the restrictions are being released. So Hervey Bay is a tourist area. It will have been impacted, but I think it's well set up to go forward. It's a growth area. It's often been called sea change for battlers. So it's an area that's very affordable for people that want to be by the ocean.
You try again. Oh.
And a unique environment because of Fraser Island, which in itself is a unique place, but providing shelter for the bay, a great place if you're into fishing and boating and that sort of thing. So you mentioned that you've got half the top level of an office building and 400 square metres. It's been vacant for nearly 18 months. Hopefully the prospects will be a little bit better going forward.
Yeah, so look, I think just touching on that, if you've got a vacancy there, you really need to. I'm sure you've been trying, but I often find when people have a longer term vacancy like that, it's often a new broom sweeps clean with marketing and perhaps agencies, and sometimes you've got to have the hard chat with the property manager. And I often find that commercial advertisements for properties that are for lease are extremely lacking. Lack of photos, lack of floor plans, lack of information. So really review those. In fact, I do quite a bit on repositioning and rebranding spaces and direct targeting. For example, is the agent running around town asking other offices, would they like to move into your office space at a cheaper rent, that sort of thing. So that's unfortunate to hear you've had that vacancy, but I think really need to apply some energy to that and get on with that, particularly coming out of this COVID situation now.
Okay. All right, well, that might be a good point to wrap it up, James. We've been going for an hour and 15 minutes, and thank you again for a great presentation. As always, wonderful information. and I'm sure that people out there watching and listening, we've got a lot of value from it, particularly just breaking down some case studies about some of the situations as they currently exist, that the type of properties and the type of tenancies that are doing okay or well in this period, and in the recovery period as we come out of it. Interesting stuff. So thank you, James, for your contribution today.
Great, thanks, Terry. Thanks for having me on, and hopefully I'll be able to get across the border and see you soon.
And yeah, anybody who would like to follow up with further questions, we did have the contact details up there on the screen for some time, but it's the Commercial Investing Academy. I'm sure they'll be able to find you online.
Yes,
James. So if they're interested in perhaps learning more about investing in commercial, and perhaps doing one of your courses, becoming part of one of your programs, please urge you to get in touch with James. I know a number of people have done it, and they think he's pretty damn good at what he does, and they've been very excited about the prospects of becoming investors in something other than the standard residential, having learned a bit more about it through James's Commercial Investing Academy.
right.
So we'll wrap it up there. Thanks everyone for watching and listening. Bye for now.
Thanks, Terry. Thanks very much. Bye, everyone. Take care. Bye.